Hey guys, welcome back to another video here at FiscalVoyage. My name is Felix, and today's video, Sebastian wanted me to do another stock analysis on Aflac, and we're gonna go over a previous video that I did on Aflac. We're gonna look at that. We're gonna look at how that video performed since that day for Aflac, the stock price and things like that. And we're gonna look at if Aflac is a good buying opportunity in today's price, and overall the entire insurance stocks. Are they a good buying opportunity right now? But before we get started, if you're new to the channel, make sure to hit that subscribe button. And if you like to make money, hit that like button. So let's get started. Alright, so here's the last video that I made on Aflac, ticker symbol AFL. You can see here on May 28th, we did a stock analysis on Aflac. And at that time, the stock was, at that day, $36.72. Had it undervalued about 8.9 or 9%, but I gave it a hold recommendation that day. And if we go to Google Finance, and on May 28th, you can see here, I think it's here, May 28th, right there, it's about there, and it actually popped 15%, so that was real good. So I kind of missed out there, but it dropped dramatically the following days. A lot of stock popped that during that week and dropped the same time. So the stock for Aflac been pretty much flat, and you can see here this was the best buying opportunity here. It dropped down almost 7%, 7.3%, 6%. This was great buying opportunity. This would have put Aflac at a greater than 10% margin of safety undervaluation. But even then, you know, these were still decent price. Even when I made that video, it was a decent price, but I just didn't like the margin of safety. I like 10% or more. And right now you can see here, since that video or since that drop, the stock is up 22.33%. The best, obviously, again, the best buying opportunity was on October 28, 29. Those 2-3 days, you can see here, is up almost 31%. So we're going to determine right now if Aflac is a good buy right now. So first, let's look at Morningstar. And you can see here, Morningstar gives Aflac a 3-star rating, which is a hold, or might be undervalued or a little slightly overvalued. But we look here, they give fair value price of about $50.52. And currently, as the last close, $43.85. And right now, as you can see here, Aflac is at $44.27. It's up about 1%. As the time of this video. So if we go back to Morningstar, you can see some of the ratios that I like to look at. Interest coverage at 17.8 or 18 times, so outstanding interest coverage ratio. Debt to equity ratio at 0.2, outstanding debt to equity ratio. Interest coverage, I like to see it at 2.5 and higher, maybe even 3 and higher. And debt to equity ratio 1.5 and lower. So obviously this destroys that. Price to sell 1.47. I like to see this at 2 and lower. Price to earning is good, 6.88. If we look at some of the other valuation metrics, you can see here price to earning currently at 6.88 is under their 10-year average or 5-year average of 10.6. Price to book looks good under the 5-year average. And if we look at the operating performance, return on equity has been over 10% in all the years. You can see it's got up high as 20% and the low as 12.15, but overall solid return on equity. So let's look at the fast graph for Aflac. You can see here the company has been solid throughout the years, except 2013 to 2016, where it's been kind of flat, and actually down in 2013 at 6%. But you can see here it was flat for a few years, and then it jumped 10% in 2016 and then jumped 21% in 2018. So that's what drove the price for Aflac to continue to go higher, because you can see here earnings was flat and so was the price, was basically flat until they started earnings was progressing. You know, you see here 10% growth, and in 2018 21% growth. So that's what really drove the price higher. The green dots represents my buying position. I bought about $500 worth of shares in March 31st of this year, about $35. So I'm up very nicely here. And then I bought $1,500 worth of shares in August of 2013. So I'm up substantially here as well. But if we look at the fast graph, if we're showing this to around 7-year period, you can see here the company or the market likes to value this company at about a PE around 10. And right now, the company has a PE around 8.9 or 9. So it's slightly undervalued based on that normal PE. But even if it will revert back to the mean, you have a decent total annual rate of return, about 13.6. So that does present a nice total rate of return for such a high quality company with great balance sheet. So I actually like it. Even it jumped, you can see here, is it from $33 to now $43, and it's up about 1% today. But overall, long-term debt to cap ratio of 19%, S&P credit rating of A-, so it's investment grade company. Overall, I'm very happy with my holding right now for Aflac. You can see here when I originally bought it, I was up almost 100%, 107% before the market crash of March here because of the economic shutdown and COVID and things like that. But right now I'm up around 73% since then. But a lot of the insurance company has been basically flat throughout the years after the economic shutdown and things. They've been flat since March, and right now some of the insurance company, Cigna, Aflac, and some other financial companies have been going up very substantially because of the vaccine, the economy opening up and things like that. So I could definitely see Aflac going back to where it was, about $54 before the all COVID and all the shutdown and things like that. So that's definitely present a good, decent buy opportunity. It's not as great as before, but I think it's a decent buy at today's price. And if we look at the dividend history for Aflac, you can see here the company has been paying a growing dividends for 38 consecutive years. The 5-year dividend growth rate is 7.5, and they actually announced a dividend increase recently. If you look here, about 18%, so that's outstanding. Even with all the things that's going on, Aflac was able to increase the dividend by 18%. That just shows you the strength of this company and what the management believes going forward. And another thing I like to look at is the dividend yield average. Right now, the yield is about 3%. It might be a little 2.9 or 2.8, but as you can see here, anytime really the company yields over 3% is a good buying opportunity because the 4-year average is about 2.35. So right now, that's why I think it's a good buying opportunity. It's not a great one as before, but a decent one, none of that, because of the vaccine, economy opening, and more treatments for people with COVID, so that they're not with the insurance company, the insurance company liable for that, those deaths and things like that. So this is what's driving the stocks for insurance company and financial stocks to go higher. So overall, I like Aflac right now. If we go back to the fast graph, decent rate of return for such a high quality company. Right now, personally, I'm not buying. I'm just going to hold my shares and collect the dividends. So thank you for watching, guys. Those were my thoughts on Aflac and the insurance industry. I think Aflac is a decent buy. It's not a great buy. I could definitely see the stock going back to $50. The yield is good at about 3%, much better than the S&P 500. The valuation looks good, about a 9 PE versus a 5-year average or even the 10 years average. So if the company is undervalued, I find it attractive right now. Overall, solid company. I'm personally not buying more shares. I'm happy with the current position I have. I'm just going to reinvest the dividends elsewhere to other different high undervalued stocks. So thank you for watching, and if you're new to the channel, make sure to hit that subscribe button, and if you'd like to make money, hit that like button, and I'll see you guys in the next one.